Great.
Andy,
All
how are
right.
you?
Doing great, Jamie. How about yourself, buddy?
Man, I'm just fine and dandy. Been an interesting week to say the least. A lot of good stuff going on. A lot of crazy activity and some crazy goodness with a couple of stocks that Holly's picked up on, this past week. So got some good things in store for everybody today. Want to thank everybody for popping in.
All right. Yeah, thanks, Jamie. And we look forward, always forward to going over the Holly recap. And, as today, we plan on bringing you a great show. I know Scott and Jamie are ready to get out and play some Frisbee golf this afternoon. but unfortunately, I won't be able to go because I'm in Texas. But anyway, guys, that's not going to stop us from bringing you a great show, and we're looking forward to it. And I hope you are too. And let's move right on and get into the disclaimer. Guys, what you see here today is for educational purposes only. Okay, we are here to show you some really cool stuff, some really cool alerts and configurations, and our artificial intelligence in which we call Holly. But we must send this out with a little recommendation that this does not, constitute or should not be construed as any investment advice. Okay, if you are seeking that, seek a registered broker or an RIA. All right, moving on. First thing we're going to talk about today, before we talk about the overall market and take a look at the market, we're going to talk about how at Trade Ideas we don't leave you hanging. Okay. And what I mean by that, guys, is we don't bring you in here, sell you a really cool software, and then turn our back and there's no support. We have tons of support here, and we have tons of interactive webinars, chat rooms. So one thing we do pride ourselves on is not leaving our customer hanging and being there for them when we need it. And it all starts out in the trading room, which is a daily trading room moderated by Barry Einerson, and he does a great job in there, and that's 7 hours a day. And what you see here is pretty much what you see when you go into that trading room on, and you get to view his desktop as he navigates the market, and he makes calls on stuff that he's trading, and he'll answer questions that you might have. He does a lot of multitasking in there, and he does a great job. So boy, if you haven't been in there, you really need to get in there. And then we have, the webinars throughout the week, all starting on Monday with Jamie Hodge, my partner here today, who also does one on Mondays with Steve Gomez. A lot of good information gets passed around. They do a really good job of setting price alerts, and I think Jamie may bring a couple up that he shared on Monday that are doing really great. Good stuff there. Wednesdays, you got Dan Merkin and Brad Williams, which I know a lot of you guys attend, which they do a Q&A and also a demo of Holly and alerts. And then Steve, of course, has his trade of the week, myself, on Wednesday nights. And then today we got myself and Jamie Hodge, and we look forward to moving forward. And as we move forward, let's just do that and talk about the agenda for today. We're going to talk about the market recap as we always do. We like to kind of get our opinion on what we think of the market, and we will definitely touch on that. Then I'll turn it over to Jamie for the Holly recap, and I think there were some really good calls by Holly today. I know there was a little bug today, and I'm going to go ahead and come out with that, but does not discount the fact that she had some incredible calls today, and the data was only out for about 5 minutes. But we're working on that. We actually brought in some reinforcements today, met them in our marketing meeting that we had. So we plan on getting that fixed, and but still, we still have the calls, we have the entries, and we're going to talk about that. Then I'm going to show you an alert today that did some hunting on alpha hunting and found a really good price and perfect timing on it, and I will show you that. Then I'm going to finish up, if we have time, on what I'd like to talk about anytime I'm coaching somebody, anytime I am having a session with somebody, and it's called Finding Your Niche. And I'll elaborate on that as we move forward. But for right now, let's get up to spiders and talk about the market here. As I expand this out for you, and we'll pull up the good old SPY chart, and we may take a look at the cues as well, as Steve mentioned yesterday in his webinar, that is holding up a lot better. But look what we happened today, guys. We were in that wedge. The spiders were forming a wedge for several days. We finally broke out yesterday after the Fed meeting, and the Fed basically kicked the can down the road and no interest rate hikes. So we broke out of that wedge and finished strong, highs of the day. And then lo and behold, we had a nice little gap today. Not much movement, you know. I was kind of surprised. Maybe the bulls didn't try to go ahead and push it forward, you know, push it higher and fill the gap. We got a nice little gap there from when we had this gap down and sell off. So I anticipate there's a really good chance, maybe, and it may be another gap up, you know, to this. That's the way the market. For the last 8 years, Steve and I have been joking with one another about how the market rewards, you know, people who hold stocks overnight, and thus a lot of times you get a market that gaps up a lot, and like today, gap up, no movement for the intraday trader as far as the spiders are concerned. Of course, if you got trade ideas, there's lots of alpha and lots of movement to find. But for the most part, look, we're right at the lower end or upper end of this band, which is now kind of resistance. Was resistance back over here in July, finally poked it through, turns into support, held it for a while, and then of course the big red bar, and then and now, lo and behold, we didn't quite close above it. Let's just say we closed right at it, but now it's kind of it's resistance again. So we'll see what happens. We're still, you know, a bear could argue that, hey, we're potentially putting in a head and shoulders here. If this past shoulder, and here you got the head. Now, if we end up going sideways for a few days and roll back over, it could be possibly be a head and shoulder pattern. But we'll see what happens. But for right now, you know, I think you got to remain bullish. The bears, once again, as Steve always points out, you know, Lucy pulled the football away from Charlie Brown. So, and the bears, after this big sell-off, I'm sure a lot of people got short, thinking, all right, this time, it's been 8 years, I'm going to get it this time. And sorry. And we'll see where we go from here. But Jamie, what do you think about this?
Yeah, you know, I mean, hey, Fed announcements all the time. You know, it's almost like clockwork. It's like, of course they're not going to raise rates, but they will eventually. And, you know, I know I go beat this drum from time to time, but once again, you know, all we can do is count on, you know, look back at our experiences with the market. And, you know, we've seen this movie before. You know, we've seen it in the late 90s. And, you know, when they really start trying to, you know, when they really start cranking up those interest rates, well, that's when things get interesting. So as long as they're pumping money into the system and, you know, the market's reacting in this fashion, yeah, I mean, the bears could say that, you know, the pattern is a tell, but we never know. And, you know, the good thing about it is with what we're doing here, you don't really have to know. You know, because we're feeding the quality data every day that people need, and, you know, whether it's an up market, down market, sideways market, by employing these methodologies that, you know, we've been teaching in the webinars, it really just shouldn't matter, you know. Yes, there are certain things in a down market which, you know, the only thing that burns in my mind is a short list, you know, but that's the only time I really hear people complaining. People like to make money on the short side. Just as much as they do on the long side. And of course, we all know that action happens a lot faster. As Steve likes to always point out, you know, the staircase up versus the elevator down. So yeah, it is exciting to trade on the short side. I mean, you can get your fill. But yeah, I mean, as we led up to that Fed day, it was really interesting to see that little tightening wedge there, and we look back and see that, there was a little bit of support that we got put in back there. And, when that wedge starts to occur, that's that means some move is going to happen, but we never know if that's going to be up or down. And then, of course, not by magic, but I guess just by coincidence, the gap today took us back up to the top of that short-term range that was established.
Yep.
So,
Yeah.
time will tell.
That was a very good point that you made. Saying that although the market's not doing anything, we have the tools, we have the alerts that point us in the right direction and show us what to trade. Because there was a time in my trading career when you had a day like this in the spiders, or any instrument, where I would just be so frustrated because I didn't know what to trade. You're trading the market. Back when I started, you were always trading the market first. With trade ideas, you don't have to trade the market first. I mean, because there's trades that come through these alerts all the time that just ignore what's going on in the market, whether it be news, whatever the reason, volume's coming in, surge in volume, stocks are moving. So that's why it's so important, guys, for you to have trade ideas, because it's going to show you, it's going to alert you on what to do and what to trade, versus looking at the spiders here, and I will collapse it down a little bit and look at the 5-minute, and versus trading this. I mean, how would you like to be stuck just trading? I feel for anybody who's trying to trade this mess, and this is just. This is just not the day. This is a normal day for the spiders. If don't you agree, Jamie? I mean,
yeah,
this is not out of the normal.
And we've been talking about that for probably the past 4 or 5 weeks, because when we get to the top and we get in that little range, trading days turn out a little bit different. We'll go from highs to lows, right? Maybe that's a point on the spies, maybe it's a half a point, but the intraday ranges are getting crazier. Right? And that's a symptom of being in a little tight range-bound market, and just like you said, okay, we had the gap up today, which is good if you're long overnight, great, kudos. But from a trading perspective on the actual intraday session, you're right. People are like, okay, well, we might give it, are we going to fill the gap, or, everything's already up, so I'm a little reluctant to go long. But see, here's the answer. Market gap's up? Well, I know from my human observations over X amount of years, this is going to be a tricky day. What should I do? I think I'll just go with good old-fashioned statistical probability. Makes sense to me. Why? There's no reason to go, oh, the gap up, oh, the gap down, because if you're relying on statistical probability, all that's going to be folded into the equation, in the beginning, based on, the analysis that was done the night before, whether the market gap's up, down, or flat, sideways, it just doesn't really matter. That statistical probability still remains intact.
Yeah, I agree. And on that note, I can't think of any better time than to just launch into, speaking of statistical probability, what Holly does best. So I will turn the reins over to you, Jamie, if you want to take control, and we will dive in, because once again, I thought there were some really, really great calls by Holly today. So if you want to take it over, Jamie, and
yes, sir. 1 second here. All right, just let me know when you have eyes on my desktop here.
Got it.
All right, very good. So let me just make these charts a little bit bigger. And let's just take a look at Holly's strategy panel, what showed up for trading today. So, total we had 8 strategies, which is kind of a, I'd say an average collection. Sometimes she'll go up to 15, sometimes there will only be maybe 3 strategies in there. But today we had a total of 8, and 2 of those were shorts. The other 6 were longs, as we can see. The 2 shorts did not issue any trades today. No big surprise there. Sunrise movers did not trigger anything either. And then, of course, we can see these were the strategies that were active today. And I've got them sorted by the most active, which was the quarterback. First to the party, bullish pullback, but all long strategies today. No shorts were triggered whatsoever. Now, for those of you who are already Holly subscribers, probably noticed that, I don't know, it was a pretty good ways through the session. We had a little glitch in the server, and everything disappeared, and it wasn't that long before it came back up. So these numbers that we're seeing with risk on are going to be pretty accurate. I know they have to go back and redo some of the risk off statistics. That's why the graph is a little messed up looking here. But the good news is all the trade data came back, so we have all the entry prices, so we can still take a look here and look at some of the trade arounds that occurred on the Holly trades today. So, you know, looking at right up about 3 points on risk on today, on a total of about 26 trades here, I believe. So let's take a look at some of the trades. All right, so let me sort. We'll go this way. First one I want to talk about today is this TUP trade. And just to refresh everybody's memory, or for those of you who might be seeing this for the first time, as soon as I double-click on a symbol from the trade blotter from Holly today, we're going to see the blue arrow indicating the 5-minute bar in this case, where the signal is generated, and the blue box is going to correspond with Holly's entry price. So I'm just going to take the liberty of drawing a line straight across here and talk about when we see this trade get issued by Holly. Obviously, the stock has already put in its top, and it's intraday low right here. So the stock is range bound at the time that Holly says, you know what, this looks good from a statistical standpoint. I think I'll have me a piece of this one. So 64.33. When we look at the strategy, that was the quarterback strategy.
Mm-hmm.
Quarterback is designed around a 45-minute hold time there. So Holly makes the call right here, and we can also see, you know, as far as expectations, what are we seeing? Okay, we're not just seeing a chart and an arrow and Holly spitting out the symbol. We're seeing a play that is weighted at a 59.4% chance of succeeding coming into this session. So number one, we've got a statistically weighted play here. Heavy on the stats on our side. We'll take that. Now, interestingly enough, and those of you who attend regular will see what I'm talking about here. And for those of you who are new, what we're talking about right here is being able to identify the next event, or, you know, from a trading perspective, another pattern coming out of this these bars right here. So Holly's just calling it right here, saying, hey, statistically speaking, this is really good. So, you know, whether we pile into 100, couple hundred shares right here, we can already see the bottom's been put in. We got statistical probability on our side. Yes, it's worth the risk. I'm going to get, you know, get 100, 200 shares on the books right here. But then what my eyes go to immediately is once it pops out of that range right there, this is the intraday range break, right? So this is a very popular pattern. It's a popular pattern, it's a simple pattern, and it's fractal, meaning it can occur on any time frame. You know, this pattern right here looks very similar to what we do on the trend change lubricant type setups. So we get the statistically weighted play here, whether we go 100 or 200, and then we can immediately identify, hey, this is going to be a really good time, assuming the volume is just not too pathetic, through this plane right here, to really add to that position, right? And this is, you know, what I like to talk about all the time is that these techniques right here can really allow you to leverage what you're seeing on these Holly numbers right here. So it really allows you to leverage the alpha on a per trade basis when you see these simple setups. And Andy, you know from experience, this is a common occurrence on these Holly setups. You know, everything from the little micro consolidation kind of NR70 pattern that we have down here right before the signal, and then looking to the future and drawing that line straight across can really allow us to get a lot of bang for the buck and, you know, get additional gains that we can't necessarily see reflected in all of these statistics here.
No doubt, yeah.
You know?
Mm-hmm.
All right. So good trade around opportunity on the top there. Now let's just click through some of these other ones. GWRE, here's the 5-minute candle where the trade was issued. We'll just do the same exercise here.
Now, just a quick reminder why he's doing that, guys. Remember, quarterback is it's kind of a pullback strategy. It's I can't really, is it 25% or I don't know what kind of pullback it has to have, but I
think it is
know
a 25, yeah.
Yeah, it is a pullback strategy on the intraday. So once again, we talk about these pullback strategies, the own support and the turn. Anyway, this is a good one. I always like these ones where they're kind of contrarian because you're buying into weakness. But yeah, I think it's based on the intraday there pattern. But,
right. And the interesting thing about this one, Andy, is the other common occurrence that we see, right? So Holly calls it right here, 58.77, and obviously that's the 25% pullback at work because we can see stock was up nicely, wicks out here, takes its pullback. That is the trigger. Of course, there's a very complex filter set accompanying, that 25% pullback alert, which changes on a daily basis if the strategy makes the cut for the next day. But the interesting thing here, and I kind of like seeing this on these patterns because Holly gets the trade here, goes green, and then pulls back. So shortly after Holly enters the trade, she's going to be slightly down in it, right? So the habit that everybody needs to get into when you're watching Holly trade, she gets into a position like what we see right here, maybe it goes green temporarily, as long as it's red, because she's going to be slightly underwater here. Of course, we don't have to worry about getting stopped out of the trade because the stop loss isn't, we're nowhere near the stop loss area, right? But it pulls back. So always get into the habit of doing this. Holly's in the trade, it's slightly red, get in the habit of coming up here. Of course, I drew the line right across here, but what you'd be doing is right-clicking and setting a price alert for that same level so that when it pops back up through, whether you just want to monitor the position and go, okay, everything's working as proper, but really this is yet another opportunity to add to the trade because while these trades have statistical probability, timing is the other issue. The probability is there, but that doesn't mean they're just going to go straight off to the races, It'd be nice if that's what happened. Sometimes that does happen. We buy something, we're immediately in the money. But a lot of the times, the stock's going to shift around a little bit. Buyers and sellers are going to have a little battle before the true direction is defined. So if you get into the habit of, seeing Holly go red on a position and then just creating a price limit alert for the same entry price so that when it penetrates that level again, that could be the time when it goes, and if things haven't changed, well then that should be a good second entry opportunity. Now, on top of that, if we're in here and then we break again, once again, we're penetrating another range break. Now, this one's not as pretty, it's real short, but the pattern remains, as a famous man would say, the song remains the same. All right, so that was a GWRE. Let's see here.
While you're looking for the next one, I'll just kind of want to elaborate on a guy who just asked a question about, how do we know which stocks to trade? What do we do? Once again, guys, if you will pull up the AI strategies window for me there, Jamie, you have your probability, you have your profit factors, you have your winning percentage. So it's you're kind of given an edge. I mean, it's almost like I hate to relate it to poker, but if you were playing blackjack and you're looking across the table, okay, and the dealer's showing a 6, up, and you got 20 in the hole, and you're thinking, oh, it's a good shot, she's going to bust. I'm not going to take a card. I mean, even if you have 12, you got 12, you're going to get the odds favor you to let the dealer bust. I don't know what those odds are exactly, but the same odds can be applied here as far as this winning percentage goes. So these trades, they're not just trades we're making on a whim. Holly, these are back tested, these are optimized, and they are proven. winning percentages are not numbers we just come up with. These are taking sample sizes and optimizing it over and over and over until you get these winning percentages. So that being said, it's a gray box. These are ideas, just like any alert that you would build. Okay, so you have to make a choice by using your trading knowledge, your chart, your knowledge as a technician as far as charts go, and decide, what trades am I going to take? Which ones am I going to pass on? And there's other variables. What's the overall market doing? So there's what's its peers doing? So there's a lot of things that may go into a trade, but Holly's definitely, putting you in a position to where it statistically favors you to make that decision. Sorry, Jamie.
Hey, no worries. Absolutely right, because we as humans over, however long each and every one of us has been doing this, we've been conditioned to think a certain way, because what does everybody have? Everybody has charts. No matter what language you speak, the charts are universal, right? Everybody can understand the charts, and that's what we have to have. That's our roadmap. It's the footprints in the sand, but it's not the Holy Grail. It doesn't exist. But we have to use this as a roadmap. So, for example, the reason that we're even paying attention to these trades in the first place is because they have high statistic probability behind them, right? Now, you ask any trader out there that you might know, hey, do you trade on statistical probability? Most people are going to be like, well, I've played around with those models, but no, I'm more of a technician. I like to look at bid sizes. You're going to get a lot of different answers. But, if we know right off the bat, as soon as E and V was generated here by the bullish pullback strategy, then we know that coming into the session, anything that this guy spit out today should have, 72.7% chance of winning. Now, looking at the trades today, it only performed at 25%. I slightly overperformed. This guy overperformed, right? And these guys underperformed. But on the grand scheme of things, on that trade count of 26 trades, we're up almost 3 points, right? So to put that in, trading perspective, if we were popping 100 shares of each one of these trades, we would have traded a total of a little over 5,000 shares. Now, depending on where you do your trading, that could have cost you, let's see, well, depending on how many transactions, it could have cost you a bundle. But if you're on a per share basis, it might have cost you $25 and you're up 300. So, that's a pretty good spread between commissions paid if you're on a per share basis versus, a transaction basis. But, we're getting a little off tangent here. So let's pretend we're just now seeing E and V here. And we know it has high statistical probability because it's coming out of one of these trades. So if the signal is coming here, 39.05, and then I go over here and I think to myself, okay, well I can see, this is yesterday, and the stock, yesterday looked like it put in a bottom coming into the open, and now it's just going straight up again. And the human aspect would be to go, how does, Holly says it's good statistical probability here, but it's already came all the way back up from here. How do we know what to expect? How much upside, of course, if we're in the moment here, how could we have had some expectations that this was going to happen? Well, we have to look at the daily. We have to look at the longer time frame. So we can see the signal was generated right in the middle, of what turned out to be the day. And at that point in time, it was right in the middle of this bar. So you're thinking to yourself, well, it's got some momentum. It could go all the way to the top of that bar, way back from the, let's see here. How many days ago was that? That was the 9th, right? And of course, that's exactly how it played out. So, that's one thing that we like to constantly bring up is to temper expectations. We constantly have, we look at our intraday, it looks good, but then we constantly have to see what is expected if the move continues to the upside or the downside, and how much room do we have on the daily. So when you talk about trying to keep things as simple as possible, you're selecting your trades from a statistically rich environment that Holly's creating, and then applying some pretty simplistic chart reading techniques for support and resistance, and being able to draw some horizontal lines at the appropriate levels. And that's really about as simple as you can keep a trading routine. I mean, Andy, you've seen and done a lot just like me. I mean, would you agree with that statement?
I totally agree with that statement. Look at that trend. Even going back to midday yesterday, it's just trending up. And you got a nice little pullback there. Once again, a kind of contrarian. You're buying when others are selling, but you're playing the trend, and the trend is moving higher. Right. You're right. There's no reason to complicate it. Yeah.
And really, you know, these techniques that we showcase in these webinars are repetitive, but they're effective, right? And what better way for a trading community to operate is that here's the technology, and here's the technique on how to use the technology. You know, keeping it simple, being able to identify these simple patterns and play statistical probability. It's just that sometimes it takes a while for us humans. You know, we don't like change that much, especially when we've been doing something for decades, right? And then we're trying to change our behavior. Or you might be brand new, but never interacted with this type of technology before. And, you know, quite frankly, I don't blame anybody, because right now, if I had to have like a knee surgery or something, and I went in there and they're like, well, you know, good for you. The surgeon's just going to be a robot, it'd give us a little bit of pause, right? But in the future, that's probably going to be commonplace, right? And just like in the investing world, what you're seeing is the AI start to make entries into all different types of, you hear about the robo-advisors replacing the financial advisors, and so forth and so on. Now, we just happen to be the first people in our space to bring this to market. So, we were ahead of the curve for a very long time. Now it seems like the curve is catching up to us. And, here's Holly, hasn't even been online a year yet. So at the end of the year, she'll be 1 year old. And, 2017 should bring a lot of improvement, some very exciting technological aspects to be put in place at Trade Ideas and give you guys an even better product. Okay, so we did ENV, let's see, the TUP, we haven't talked about TMUS yet, and this is a good example here too, because this is one that almost got us out, right, from a stop loss basis. And that's also another point I'd like to make here is we talk about the trade arounds, and a lot of the times we'll see Holly exit on the profit save or the reduced risk functionality, but that's just some safeguards we've built in to keep Holly from letting too much profit evaporate during the day. But once again, we humans, we're a little bit more proficient at reading charts than Holly is. So, what everybody just needs to keep in mind when you're following Holly into a trade is just the main stop loss here. So we can see this one, Holly called it right here. They jerked it down pretty good, never came close. Well, it did come close to our stop, but it did not get us out. And by employing the same technique that we covered in the, when this down cycle is occurring, we take the high, we draw a line, or specifically, we create a price alert for that price so that we don't miss it. If we're in 100 and we're like, whew, getting out, maybe we added a little bit more here. Maybe we're just like, nope, I'm sitting with what I got. If it comes up here and penetrates again, I might make another entry, and then we can see, had you done that, it would have worked out pretty nicely. And just, once again, all we do is just draw a line straight across from the range break or the initial price, which I could jump the gun on that one. I didn't do the original price, so there actually would have been a couple of different opportunities to add shares. Once this thing held up and we realized that we were not going to get stopped out, buyer comes back in, off to the races. Two different entry points that we could have added to. All right, Andy, I think that's about it for Holly today. Some really good examples of how to trade around and add to those positions. I think you got some more juicy stuff on the blotter for today, right?
Okay, yeah. Just pass it over to me if you would, and nice job. And I'll try to take a look at Galt for somebody. Let me see. They mentioned that about uh, on Holly, so let's just take a look real quick at Galt. I'll tell you what I'll do. I gotta find it here, and there she is, Mighty Mouse. Okay, the entry in Galt was 268. Yeah, I mean, looking at this one, I really don't see any pain at all. I mean, it looks like Holly risk off is at 14 cents and the risk on, so she's pretty much maxed out that trade. But you know, buying it on the entry at 368, which is pretty much right here at this arrow, and the lowest it got right here was 263. So you're only talking about a nickel. I'm not going to look where the stop was on that one.
It was like 243. Yeah,
okay, yeah, I was going to say it wouldn't have been anywhere near it there. So yeah, I think that was a great call by Holly. Had a lot of potential, and that was following a big move yesterday, but you did have the volume coming in today. Thus, you know, Mighty Mouse looks for those, you know, momentum, volume, you know, little piss ants, I call them, small, low cap stocks. But anyway, yeah, that's. I couldn't have traded any way better than Holly just traded it. I mean, she took 14 cents out of it, and the max would have been 16. So
it was just a straight up entry because, you know, the chart is so stretched out from the open. You know, you see that wick above $3, right? That kind of throws it all out. It's not as tight as those other examples that I was, you know, showcasing. So
exactly,
you know, I just didn't see any patterns other than the statistically weighted entry. You know.
Right. But you know, nice trade nonetheless. You know, on a percentage basis. Yeah, it did work. It did work. All right, let me pull my slideshow back up here and go back into present mode and see if I can negotiate this thing. Yeah, I want to talk about trade ideas on an alpha hunt today. And this is an alert, and don't worry, anybody out there, I will share this with you. But I just want to show you guys, you know, what the software can do. You know, it's like people want to sit around and get all these Bloomberg and briefing and read these news sources and see if they can catch the action early. Guys, this software catches it before most news services. And if you just have it tweaked, you know, your filters set up to look for this kind of alpha, you are going to find it. And this is proof in the pudding right here, guys. This is an extreme vol, and I will show you the filter here in a minute and the alert. But this is SAEX, and you can see there at 9:08. This is Pacific time, 9:08 Pacific time. The price on this was 7:05 when it first came through. And I want you to look at this, guys. It just, oh, Andy, tell me you didn't do that. Trying to click on something. I mean, right there, guys, is where your alert went off at 7:05. And look at the volume. And the volume was just now coming into it. So I don't even know. I didn't have time. I was so busy today to even go. I'm sure there was news involved. But look at that move. You talk about alpha, dude. You had like 3 points in this thing. And you caught this if you just have the right alerts at 7:05. So, yeah, that's crazy, huh, Mike? But anyway, yeah, let me show you. Let me show you this alert, guys, and what you're looking for. Okay. First, let me move low folders out of the way, and this is the one. It's called Extreme Volume High Low. So what we're going to do is I'm going to move this up here, and we're going to take a look at the configuration. It's a multi-strategy window, so not only does it show you stocks moving up on very high volume, it also shows you the ones going down on very high volume. So if I look at the configure all, okay, and when you have a multi-strategy, you kind of got to look at, it's a little bit quirky, but you just hit edit select it, and it's going to show you the config window, I think. And then we're going to look at the filters here. and here's what you're looking for. All right, this EPS of 0.01 minus on the minimum and the 0.01 or minus 0.01 on the max. Remember that, guys, if you ever want to filter out any ETF, that's the way to do it. So in other words, anything that comes through has to be reported. The way to do that is just put 0.01 in the minimum and a negative 0.01 in the max, and that will filter out all the ETFs. Relative volume is based on volume today, and it coincides with the time of day in which you are. So in other words, if a stock normally does 500,000 shares at this time of day and you have a ratio of 2 to 1, it has to be doing 1 million shares. Okay, volume today just has to be doing 300,000 shares at this time for an alert to go off. But here's the kicker: 1 minute volume, you got 1,000%. Okay, and that's what caught this where it did. 5 minute volume, 300%, and that's basically it. You have it on the upside and the downside, and once again, just it just doesn't get any sweeter than that. And that's what you can do with a product like Trade Ideas. So if you're out there and you're searching around on briefing, trying to catch the next big move, or listening to Trade the News, whatever you're doing, you can stop doing that, because if you have Trade Ideas, you can set up alerts to show you stuff like this, and where you can find that alpha and you can find it early. So yeah, I just wanted to show off that one because it is a good alert, and I will take the time right now, guys, to drop it into in case anybody wants it, I will drop it into the chat window. The way you do that, you just hit save and share to file, save and share, and you copy all. And if you look into the chat window, guys, on your GoToMeeting sidebar there, you will find the chat window, and that's where I'm going to drop it there right now. So if anybody wants that, all they have to do is grab it and load it to their cloud. So that being said, guys, I think, Jamie, do you have, I may save this other topic for, because I may need a little more time on this, and I know you guys are in kind of a hurry today, so I might bring Scott in at this point. Guys, thank you very much for joining us today. I know you guys are going to hear from Scott, because he's going to give you a nice little discount on some of these incredible tools that you've been seeing and these alerts, and so, Scott, yeah, if you don't mind, you can just come in right now, and I will pull up
sure.
Pull up this.
Sounds good. Yeah, we like to thank those that attend our webinars by giving them a discount code that you can use to join Trade Ideas or do that, or use it for an upgrade. So we have two different tiers of service. We have standard and premium. Standard starts at $99 a month, or $888 a year, and premium is $1888 a year, or $188 a month. Both provide the core of Trade Ideas, including your real-time data, a full hour of one-on-one training, all kinds of great stuff. But it's the premium that really has the magic with Holly, the AI, and also unlimited backtesting with our backtesting tool, the Odds Maker, price alerts, and other good stuff. So if you use that code you see there, Trading You, all capitals, and you can also get this by downloading a handout. Go to the Handouts panel, click on Expand, the little plus button, and download the PDF. It also includes some important contact information in case you have any questions. But that code will save you 15% off your first month or year of premium, so it's a really great way to join us for the year. Or you can take 10% off your first month or year of standard. Just sign up for the first month, less 10%, so that's about $84. And you get it going with that, and then you get the full hour of training, and then just go ahead and upgrade into premium for $188 a month, or just go ahead and start at $188 a month and get going with Holly. Thanks everyone for attending. Thanks Andy. Thanks Jamie. Y'all keep an eye out for more invites to webinars next week. You can follow Steve Gomez at Today Trader on Twitter. Jamie Hodge is QuantBot on Twitter. Follow us on Facebook, facebook.com/TradeIdeasPro. We post some original content there occasionally, and also you can use our 619 phone number if you have any billing issues during normal business hours on the West Coast, or email any of your questions about using our software to info@trade-ideas.com that goes directly into our help desk software. Thanks, guys. Jamie, I'll see you in a little while.
See you soon. Thanks,
right.
everybody. Have a great weekend.
Everybody. We'll see you next week.
Ciao.